Ladies and gentlemen, I just wanted to make a short video here talking about a podcast that I just recently saw regarding Kathy Wood and Anthony Noto. It was on the For Your Innovation podcast, which is ARK Invest's own podcast, where they bring on CEOs and such to talk about their businesses. This is exactly what Anthony Noto was there to do, to talk about SoFi. Now, it was a 52-minute long podcast talking about sports and colleagues that they worked with and, working together in Wall Street, but mainly SoFi. I wanted to just touch on the things that, was specifically talked about SoFi that wasn't, regurgitated statements that Anthony Noto makes about them trying to be a one-stop shop and all the stuff that people usually hear every time that he's on any airwave. So there was a lot of interesting stuff, but I'm going to try to keep the video short. One thing he talked about was sort of refining his statement about, winner takes most in fintech. And he really wanted to talk about how there will be several winners in fintech. In fact, there was a ton of category killers in certain markets that he actually wanted to talk about, like Chime, he said, was dominating in the space as long as they stick to what they're good at. He thinks Dave.com is making great moves. Robinhood is the leader in brokerage. However, he thinks that they'll struggle the more that they get out of the brokerage area. Maybe a little bit of a hit towards their credit cards, getting away from Galileo. Who knows, right? He said, they need to take it slow. But Affirm, he, mentioned doing very well in a very underserved market. And another one he even said was Square, right? Block Incorporated. He said completely owns the SMB space and they will be around for a long time. He said, we'll be a good SMB player in lending and checking and savings, but maybe not for the payment processing and merchant acquiring that just Block absolutely dominates in. In the horizontal space, expanding to multiple products rather than just one specific category, he said it's really just SoFi in the large incumbent banks. He said that the largest banks will stick around forever. That's no question. He said that the real problem will be where the small banks come in. He said that there might actually be some problems there if they don't, kind of offer different products and services. So one of the ways that he brought this up was he said, I think about it from an Amazon perspective. Amazon didn't run around buying and consolidating small bookstores. They just slowly took market share from all of them. And, the small ones couldn't survive. He's taking market share from all of these players whenever it comes to deposits in banking. From the largest players, they are taking market share from every single large bank, but it's so diversified across all of them that they're really not even feeling it. And from a consumer financing point, they really fall on, the 8th or 9th largest income stream for these large banks. So they're really not even caring about it. He talked about another one with Goldman Sachs. I'll bring that up in a second. But he said the companies that really have to worry is the small banks. He doesn't want them to actually go out of business. So he said, we have a technology platform. We hope that they actually start to integrate and offer a better service. So then we don't have to take their market share. In fact, we'll just end up taking a small slice for, the software fees. But it is a big concern that obviously SoFi offers a better product. Now, in regards to Goldman Sachs, he literally spoke about the Marcus thing, about, how a company like as large as Goldman Sachs can go in against SoFi, which he was actually really worried at the time with Marcus joining into that space that they were in. But because they were kind of falling behind and weren't actually doing as well as they thought, they just completely gave up. Whereas whenever you're a startup and you have that startup mentality, you have to go all the way and you're kind of burning the bridges behind you. So you have nothing else to do but continue on the path that might be the path of most resistance. But still, you have to make it work. You have to survive. That's sort of where SoFi is, right? They have to go towards financial services because they don't have investment banking to back onto. So consumer-facing products, they just have to continue to be the leader there. Goldman Sachs completely just got up and left Marcus practically and said, hey, you know what? We're going to go back to what we're good at, investment banking. Now, they said being a bank has actually allowed them a ton of advantages. But one of the parts that they really didn't like was them having to stop crypto, right? Large banks, including all the big banks, can't really operate in the crypto and blockchain activities. Now, having the spot Bitcoin ETFs has made this a lot easier. They know that a lot of their users that were just purely investing in Bitcoin through buying the currencies through SoFi, now we're just buying the ETFs. So that's great. And it came at a really good time. But they still do actually earn lead generation fees if people want to, buy alternative coins. They do have partnerships with companies like blockchain.com that they can just, sort of send those clients over there. So they're still making a little bit. Another one that he was talking about was even after he became CEO, a lot of his moves were actually critiqued quite unfairly, in his opinion. One of them being the fact that he actually SPAC'd onto the market. Now, he was working at Goldman Sachs dealing with a ton of IPOs. He said, he probably dealt with over 100 IPOs at the time. So it's weird that he didn't IPO SoFi if he had such large expertise in the market. But he said, no, the reason that I had this much expertise is what led us to needing to do a SPAC, right? They had a really unique need where they needed a ton of capital all at once to acquire their bank license. And the only real way to do that was the unique set of abilities that a SPAC would allow that just perfectly fit for SoFi at the time. So he said, even going back, they wouldn't change a thing. Now, this is where the part of the podcast gets really interesting. He starts talking about, kind of getting a little cocky. He said, I would have thought there would have been more competition. He said, I was really worried about Goldman Sachs coming into the market, but that ended up not end up happening. And really, the truth is that all of the other competition that he thought would have been here completely failed, and SoFi didn't. He said, I know this sounds egotistical, but the facts are facts. We're the only one operating in $2+ billion in revenue, GAAP profitability, long-term margin expansion, and, tangible book value growth. Like, they are just doing everything that they wanted to whenever they set out for this goal. He said this, and I quote, I thought it would have been a longer war. Like, as if the job had already been won. It's just a matter of time by now. Like, just explosions in the background on the stage. Like, I thought that was amazing. Tons of confidence. So awesome to hear that. One of the things that he really wasn't expecting in the marketplace, however, was two of the largest technology-oriented banks actually going out of business. This was extremely surprising. He's referring to Silicon Valley Bank and First Republic Bank, right? Now, this actually really raised the scrutiny for the banking space. It might actually be harder, helping the moat that SoFi has for becoming a bank into the future. It might even be harder. And so he said that this is actually beneficial to their business, but not in the ways that people think. Like, it's not that because First Republic Bank went down that people are now running over to SoFi, but they might be actually considering new banking experiences. And so in that case, it comes down to a product differentiation. And where it comes to application process or user experience in the fintech space, this is where SoFi thinks that they are separated, versus other banks. He said, deposits are pouring in because of services alone. We offer a better product, and that's why we're winning. Mwah, love it. Another thing that he actually went on to talk about that added a lot of clarity, in my opinion, was how to value SoFi. So they took a lot of heat because they didn't show monthly active users or daily active users, but they wanted to get treated as sort of a fintech. He said, Facebook used these metrics and brought these metrics onto the market because they needed people to be on their platform to see those ads. That's the way they made money. For SoFi, this isn't true at all. Once people actually create an account and they might put a little bit of money onto the platform, that's now a revenue-making asset for SoFi. They have your money, and they'll make money off of it, okay? That's not necessarily alone. Like people don't have to come back every single day. If they do get your direct deposits, then that means, there's increase in spending and there's increase in all of these different aspects in investing and, savings and all this stuff, but it doesn't have to be. He said, the KPIs to really just focus on is revenue. Revenue growth, revenue per member, revenue per product, that shows you how we're growing. He said one of the greatest benefits that SoFi had actually gotten whenever they first started was starting with lending products. He said on day one, if we get a lending product that actually gets signed, that LTV is $1,000. Lifetime value of that customer is $1,000. He said it's way, way higher than our financial services products that take a real long time to actually get up to $1,000 per user. So whenever talking about this, he said it's not actually that big of a business. We've only done about 1 million personal loan products and about 500,000 student loan products, but yet they have over 11 million products overall. But lending, starting with lending, is what allowed them to actually fund these new products to actually get them to the point where they're at. And the funniest thing is lending is not easy at all. It's extremely hard to enter, which actually gives them their moat for which they don't believe new players will be able to enter very easily. That's why they're all coming from the side of financial services and setting up a bank account and debit cards and these sorts of things, because that's easy, right? And in fact, Galileo will help you with that. The lending side's really hard, but it funds a lot of the growth. Now that SoFi actually has 11 million products, they can go in and cross sell now all those people who are coming in for a debit card to get a personal loan whenever they need it. Now, he also goes in to talk about brand awareness and being a top 10 financial institution. He said 25 to 45% of people say that JP Morgan or Bank of America is their bank of choice. Okay. Out of like 100 people, 25 to 45 will say the big incumbent banks. Now, Anthony Noto knows that that's where they need to be in order to get, the market caps of which these large banks are getting, because they already have a big product differentiator. It's just about people knowing about them. Whenever he first joined the business, this was only about 2% is where SoFi would lie. Today, it's at 7%. He said it's been as high as 11%. So it is, a fluctuating metric, but the overall growth is to just grow that medium metric, right? We just need people to know about us and then actually be aware that we're a bank and we're not just like a stadium. But that is the main way that they want to grow brand awareness. The second that he realized that he needed more mind share in banking was the day that he knew that they needed SoFi Stadium. Now they're also in the NBA as, being the official banking partner. So this sort of using sports as a way of just capturing the minds of the average person is completely part of their whole process. And because he came from a background of the NFL, he knows how many games will be played in the stadium. He knows how many ads need to be played and the cost of those ads, and that actually just owning the naming rights to the stadium is actually more cost effective than running just simply ads on the platform. He also talked about his special offerings that they have at SoFi Invest. He said, IPO access is really unique to SoFi because he comes from an understanding of IPOs at the time. So we knew to go to those issuers and what to offer them to actually get access to a lot of these high-ranking IPOs. Right now, we're just not in a large IPO market, but as that actually sort of shifts into more of an IPO market, he believes that SoFi will dominate in this area. He also talked about alternative asset offerings, which, they're on an ARK Invest podcast. So of course you're going to talk about ARK's venture fund, which, by the way, he said they actually met a year ago, almost to the day, a year ago, whenever that conversation first started, which we only got it like about a month ago. These sort of processes take a long time, but he said retail investing is just getting started. He thinks that the more we can just democratize investing and getting more of these people over to solutions that institutional investors have had access to for a very long time, he believes that they're going to open up this massive total addressable market to retail investors and, bring on a ton more money than what people originally thought was even available to retail or consumer finance, right? A lot of these large banks look at, being institutional investor friendly, where SoFi just kind of wants to open all of those traditionally open available things to retail and kind of bring that market share over there. He also talked about just the simple space of online digital finance in general, where he was talking about how AI and, using that for fraud prevention will, actually bring down the case of how many times, a transaction gets a false positive for being fraud, or the fact that someone could lose money because of a scam or something like this. AI will make this a lot better. And in fact, whenever that does happen in an industry total, this will be better for people to say, hey, you know what? I'm going to trust my credit cards more. I'm going to trust my online banking more, rather than having to worry about cash, if we can bring down fraud protection. So just overall, the market in general is getting to a better space. And he kind of aligned that to e-commerce back in the early 2000s, because it might have just been a little bit too early, because whenever you're buying online products, potentially, you might buy a product and then it literally just wouldn't show up back in the day because they didn't have the processes, they didn't have the fraud prevention, they didn't have, all those systems in place. Having that over in the fintech space is what's going to allow these markets to actually open up. One of the things I didn't like about this podcast, however, the moderator right at the end said, now, we have so many questions about Galileo. We want to know about this for your business model. However, we don't have enough time. And then proceeds to ask one more question saying, what do you see for the future of SoFi? Instead of just asking that, I would have just been happy with you asking some Galileo questions, because this is where the transparency is most lacking for SoFi. Like, I would have been happy if this entire podcast was around Galileo, rather than just bringing it up at the very end and saying, I wish we could ask questions, but we can't. Anyway, Anthony Noto said, for SoFi, it's still day one. From an innovation standpoint and a data standpoint, This is like the same real opportunity that Amazon had, we have for financial services. And we're better equipped than any other company on the entire marketplace. So he's extremely confident. I mean, I'm extremely confident. And hopefully, this is a little bit more understanding of where his headspace is and where they're going next. But thank you guys for watching. Really do appreciate your time. If you want, subscribe down below for more content. But bye for now.